Hi traders, thanks for stopping by thetradinganalyst.com. This is Taylor and we're going to take a look at a bunch of charts here, and I'm going to give my analysis and my thought process, and you're going to walk away from this video with some newfound knowledge on technical analysis as well as hopefully some profitable trade ideas based off of this free analysis video. But first, if you're not already a member at thetradinganalyst.com, go ahead and give us a visit on the home page of the website and get to know us a little bit better. If you like these free videos and analysis that we give to you on a daily basis, it's really nothing in comparison to the membership you get once you sign up with that premium membership. Once you sign up with the premium membership, you're going to get instant access to the profitable trade alerts that our current members are loving and getting on a daily and weekly basis. It's a great opportunity, and we'd love to start helping you make winning trades in the market. All right, so let's take a look at the Tesla chart here to start. What I want to point out here is just to review, we like Tesla for a long right here. As we broke over this resistance, you can see it was squeezing really tight in this range, and we were looking for a breakout up to 384. We hit that target dead on. We obviously went a little bit over it, a few bucks over it, but we hit our target dead on. Okay, that was the profit taking zone. That's where we recommended taking profits. Don't believe me? Go and watch the videos that we did back here in early September. Excuse me, right here on September 11th, September 12th. We were looking for a breakout, and you can clearly see that by watching those videos we did back there. So that was our target. The target was met. Okay, so that trade was over with. All right, hit our target. Now it ended up heading lower after that, but it doesn't really matter to us because our target was already hit. We're already out of that trade. So now Tesla headed lower, and not only did it just head lower, but it ended up turning into a nice long into, in my opinion, a nice short. And I'm going to go over exactly why. So we had our chance to come up here, bounce off of these levels, but we ended up breaking the lows of the breakout level right there. So not only that, but we ended up breaking this trend line. You see this trend line started right here in March of this year. So about, what is that, about 8 months, something like that. We started here. You can see clearly Tesla is reacting to this trend line. Several bounces there and there. Reacted to it again right there before eventually breaking below it. Right there. So we've been below it for the last about week and a half right here, and to me that's a sign of weakness. We're back below the 20-day simple moving average, which is the blue line, the 50-day moving average, which is the red line, and today we got a gap down below that little area right here. You can clearly see it reacting here, there, and here on those several days, and now we're getting a gap down below it. To me, I think this is going to be potentially the start of a move lower. Again, remember, we can still head higher and still be below that trend line. That trend line is on the rise, so we can still head higher up to like 365, even up to 370 if it heads over here, and still be below that trend line. So to me, Tesla at this moment is looking more like a short than a long. I think it's going to at least test these lows here. I'm going to draw this support line right there. You can clearly see Tesla reacting to this level right here and right here several days in a row. So I keep on mentioning, you know, Tesla is reacting to these levels, and you know, anyone can just draw a line on the chart. But and I'm talking about trend lines or supports or resistance levels. The most important thing is that, is the stock or commodity or ETF reacting to that level that you have drawn? And if it's reacting to that level, then it's a good line to have drawn. If it's not reacting, then it doesn't mean anything. Okay? It doesn't matter what you think. It matters what the stock does and how it reacts to that line. So that's it for Tesla. We got that support at 335 right there, so we could get a short-term bounce. And then an even bigger support below at about 304. You can clearly see it reacting here, and just a lot of sideways trading here in that range. So definitely 304 is that ultimate bounce zone that I'd be looking for in the longer run. The next one we're going to take a look at is Amazon. In Amazon, we are expecting higher prices on Amazon. What I want you to look for is about 1020. 1020 is going to be that target up here on Amazon. And why is 1020 that target? Well, 1020 was that level that we gapped down on from this big earnings reaction right here. So you can see we've got 1, 2, 3 days of huge selling volume right here. All right. So to me, this is not to be ignored. It's a big deal. Okay, it's a big deal. All that volume is definitely something that you don't want to ignore. So that's why the target here is about 1020, and I'm cautious above that level just because of all the selling volume we saw here. And as you can see, all the volume we've seen since, any of the higher volume days, you can all see have been red days. You know, here's one. There's that red volume, red volume, red volume. Those are all the biggest volume days, and they've all been red. Okay, you can go back, and it hasn't been like that. You know, we've got a big green volume right here, big green volume right here, big green volume right here. All right, so right here we've got lots of red volume days that are confirming this selling right here. So could we break out and just, you know, completely ignore that? Yes, totally. But to me, it has me, you know, just playing it cautious here on the long side. So, you know, even with the markets ripping to new all-time highs, you know, you got Amazon, who has been a leader in the market, that's just kind of been trading sideways and kind of been lagging the market. So just a lot of factors that, you know, may come into play. Again, this doesn't mean that I'm bearish. It just means that I think that Amazon is going to head higher, and then I want to wait and see how it reacts and kind of what it does at these price points, because right now it just needs to prove itself, in my opinion, because of all the volume that we've seen on that selling side. The next one we're going to take a look at is Google. And Google, really nice breakout here. We called for that breakout, got that breakout, and it's coming into our target here at about just over $1,000 bucks. 1,005 is that exact target. And I just kind of want to go over the longer term chart here. Going back to November of 2017, you can see we had this trend line right there, got a bounce there, here, there. You can clearly see it reacting again there, there, and right here. So this is going to be a key trend line here for Google that you really want to pay attention to. It's very strong right now at the moment, but I could definitely see it taking at least a break before it makes its next move, either higher or lower, once it reaches this resistance point. You can see this is where we got rejected there, right there. And again, this could be setting up a huge breakout here, but I think that just in the short term, it needs to just either trade sideways here against this resistance level before potentially breaking over it, or get rejected here and then head a little bit lower and then potentially break that. I really don't know. I don't have a crystal ball, but I do know, or not that I do know, but I do think there's a high probability that we are going to see some kind of a retracement off of this resistance. How big is that retracement going to be? Really couldn't tell you, but I think it's at least going to touch down to about 970 right here. That's that previous resistance there, right here, and now it's going to be a level of support. So 1005 is going to be that key level that you want to be paying attention to in the future for Google. Next, we're going to look at Netflix. Netflix, huge breakout here over this resistance, and I love that it did so with some heavy volume. All right, heavy volume. You know, we're looking at volume here. This does not look like the Amazon chart. So right here we have this huge breakout here on heavy volume. You can see that to new all-time highs, and as you can see, as we headed lower, we didn't really see any, headed lower right here, we didn't see any big red volume days, all right? Didn't see any big red volume days, didn't raise any red flags. And then, again, right here, we have another influx of volume, and it's all buying breakout volume. So this is a very bullish stock here. We've got support down here at 189 is going to be that support level. There's previous resistance there, oops, and we broke over it right here with some convincing fashion. So that's going to be a level of support. If we head lower into that, that's going to be a nice buy point. Now the next one we're going to take a look at is Twitter. And Twitter is another one that I remain cautious on below this price point. Okay, cautious on below this price point. You can clearly see it's reacting to this level here and right here again. And the reason I'm cautious on Twitter is because we had a huge gap down on heavy volume. You can see that right here, and a few days of heavy volume on earnings, all right? And none of these days right here have really seen any meaningful volume, as we've kind of just puttered higher. But with that said, we're still above this gap down here. So to me, that's a saving grace for Twitter that doesn't have me, bearish on Twitter. So I kind of want to see how it reacts to this level here. To me, if it breaks over about 1830, that's very bullish here, and I think it would end up retesting those highs at around 2050. You can clearly see that's a rejection level or a resistance level up here, and we've also got a gap that may want to fill at about 1960. So that 1830 level to me is that key level that you want to be watching for a breakout on Twitter. Next one we're going to touch on is GoPro. And GoPro overall, was looking pretty decent here. We covered it before, and it was holding this breakout point. You can clearly see it's a resistance there, moving into more recent action. We came up, tested it here, and even on this day we came up, retested it, and then we ended up just breaking over it a little bit, and then now a violent break back below. To me, it's looking more like a false breakdown. I'm sorry, a false breakout on GoPro than anything. And to me, the best play on GoPro is if we head up to, anywhere above 1050, up to $11, is a great shorting opportunity, as I think we're at least going to come down and fill this gap right here at about 890. So 890, I think is going to get tagged sometime in the near term. Another thing to notice is not only did we, try to break over this level and then break back below, but notice the volume on the days that we broke back below. So big red days and some big red volume as well. So that's not what you want to see if you're bullish on this stock. So false breakouts, false moves in either direction. False breakouts, false breakdowns, they lead to swift moves in the opposite direction. So I'm looking for lower prices on GoPro. The ultimate short zone is anywhere between $10.50 and $11. Who knows if it's going to get there before it breaks down, but target is $8.90 on GoPro. Next one we're going to look at is Apple. And Apple recently has made a nice move higher above this resistance. I do think it has a little bit higher to go, at least. And if you remember here, going back to these days here, the beginning of September, you can go back and watch these videos that we did, September 13th and 14th and 15th. You can go back and watch these videos that we did on Apple, and we were calling for lower prices. And that's exactly what we got. So congrats if you followed along, because that was a nice move lower since breaking that trend line. And so that's why we got bearish, is because we broke that trend line right here. You can clearly see Apple's reacting to that trend line. And another thing too was that false breakout. So here's another false breakout. So here's that resistance there, there. Clearly we break over it right here, and then we get this breakdown below it right here, and this heavy volume selling day right here, and then a gap down. So that was the confirmation, and this was the real day that we really got confirmation on that short play and ended up moving lower. So that was a big time play and a big time call by us. You know, a lot of people were leaning against us and you know, second guessing our bearish call, but it ended up working out perfectly, and that's just using this simple analysis, using volume, trend lines, false breakouts, and this is something that you guys can all do too, you know, especially if you join the membership. You know, I want to thank you for watching this video. I really hope that you learned a lot from watching this video. Again, if you're not already a member, visit us on the home page of the website and get to know us better. I really hope that you learned something from the video, and you can learn a lot more once you sign up with that premium membership. And once you sign up with that premium membership, you're also going to get instant access to the profitable trade alerts that our current members are getting and loving on a daily and weekly basis. It's a great opportunity, and we'd love to start helping you make winning trades in the market.